Let's get a check on the global commodities market now. See, oil prices jumped really high this afternoon. There we see Brent crude futures traded up about 4% at $89.46 a barrel, while the front month November U.S. WTI crude futures also rose 4.2% to trade at $86.38. A lot of volatility right there. And we see gold prices rose about 1% to $1,886 per ounce, adding about 0.9% to $1,899. To get a sense of the weekly summary of these markets and what to expect, going into next week. Joining me now is Wachira Kariuki, Head Training and Research, Windsor Brokers, joining me from Nairobi. Great to have you on the show. Good afternoon from Nigeria.
Afternoon to you, Mr. Ladi. Such
Fantastic.
a pleasure.
I think I was still trapped. I was still trapped in the morning earlier, but quite a week for commodities. How do you see, trading this week? It's been quite bullish, but still looks choppy.
Yeah, it has been extremely choppy from Monday, but in some strange circumstances, like you just say, the global markets have turned quite a bit. Oil has picked up in the last 2 to 3 hours over 150 pips. So we think it's an end of week purchasing. And of course, people are also cutting their sales and they're starting to enter buy. And I strongly suspect the bullish market of the oil market will continue for the next maybe 1.5 weeks. Remember, we are starting a new quarter. This is the last week of the first month in the last quarter. So people are shoring up their reserves to kick in for next year. So the price, I suspect, is going to be quite bullish for a while.
And talking about bullish, most investors are looking at that $100 mark, for oil.
Correct.
Do you think that's going to hit soon in the short term?
Absolutely. Yeah, absolutely. We are ready. As at now, we are at $86.81 per barrel, which means we are only $14 short. And in the last 4 hours, we've traded close to 200 pips. So a $100 barrel is a psychological mark, obviously, and it's always been a very strong benchmark to check and assess, and I suspect we're going to hit it in the next 1 to 2 weeks maximum. Yeah, depending on how the Saudi government, of course, handles this particular crisis. As you may or may not know, the Saudi government met with the Iran government to discuss the Hamas-Israeli crisis, so we want to see how that's going to affect oil as a commodity.
And talking about that $100 mark, how do you think this is going to impact, African economies? Because right now, we're already feeling the pressure at the pumps buying fuel.
Yeah, we are. Yeah, it's crazy. Especially African countries take a larger than usual punch when oil prices increase, because oil is a very strong determinant of the standard of living for most countries. If oil increases, then generally every product downstream gets affected price-wise. So governments will have to come up with intelligent ways, create more reserves, allocate more capital towards that particular purchase, or just go the Nigerian way, create subsidies and subsidize the price of oil and at least protect and buffer the average citizen from the price change. We already have enough problems as it were, and we cannot afford to have worse economic chaos brought by the price of oil, because fundamentally speaking and from our technical assessment, the price is only going to get higher. To have moved 200 pips in the last 4 hours is a very strong bullish market on a Friday. We strongly suspect it's going to continue for the next 1 week, sir.
And talking about the Nigerian way, with subsidies, we're struggling to actually afford that, right now. And I'm wondering if you can afford, the Kenyan government can actually afford subsidies at this time.
Well, not really. But you see, we have the benefit for the first time, as I mentioned in the last interview. Kenyan government is buying oil in shillings, not in dollars. All right, which means we can use our reserve currencies and purchase a bit more of oil. So that's a plus. Nonetheless, it doesn't matter. It doesn't change because the quantities are increasing. We're involved in a couple of infrastructure projects. We are involved in a couple of very high-end production, which requires quite a bit of oil. We have a lot more people importing cars. So I don't know how it's going to happen, especially because just last week, the government was trying to borrow more money from the citizen by offering up to 15% per interest rate, and people are not giving in. Most commercial banks started pegging their demand at 18%. So they're saying you must give me 18% for me to give you how much you're asking for. And for the first time, the central bank did not receive how much they wanted. They wanted to receive upwards of 35 billion. They only got 12 billion, right? Which is a problem. So where is the government going to get this money from if the citizens and the commercial banks are not willing to lend them? So we'll probably have to borrow a lot more money internationally, maybe float an international bond, another euro bond, and find intelligent ways to cut costs and at least shore up our reserve on dollars to be able to afford the oil, because it's going to cost more for the same liter on liter.
I guess investors are trying to beat a lot of macro issues now, from inflation to currency devaluation and all of that. Talk to me about gold now, the safe haven asset. Look, it did pretty well this week. It's looking like the best week in a long time.
Correct. Gold has hit a new high of $3,023 per ounce. So gold is a fantastic reserve. Speculators have been buying it quite a bit. Traders have been holding their buys for quite a bit. It's been a fantastic week for traders who traded on oil, on gold, because it's been a very clear bullish run. There was literally no need to speculate on or sell. So the micro of it is that traders are making good money. The macro of it is that means more people are running from currencies and liquidity to go to park their money in gold as a reserve, as you can imagine. So worldwide, it means there is a bit more crisis. The war in the Hamas-Israeli war escalation has not made things better. All right. And of course, last but not least, it's so crazy that even when the U.S. started offering higher returns on their bonds, for the first time, the U.S. market hit almost shy of 5%. The 10-year bond was offered at just about 4.6, 4.7%, which is the highest return the government has ever been willing to pay the citizens. And still, gold is still rising. It means worldwide, on a global level, everyone is looking for reserves, protection, and some sense of security, because there's too much happening. And I suspect this will run to the end of the year. Then we see how the next quarter in the new year begins. But yes, gold has hit an all-time high. And it's not just a high, but how quickly to hit that high. That entire surge happened in not more than 20 days. If you look at your daily outlook. So yeah, everyone is clearly looking for risk aversion and looking for safety and security for their finances, commercial banks and individuals at large.
Risk off at this point. Before I let you go now, we see the Nairobi Securities Exchange has been ranked the worst performing bourse in Africa. Why is that? About 9 months this year in dollar terms.
Yes. Our stock exchange was the third worst around January. Then it became the second worst performing bourse around June, and now we are literally the worst index, the worst stock exchange in terms of performance. And the reason is simple. There's a lot of money that is taking flight from the stock exchange back to the US because there are alternative investments on that particular end. Number two, there's a bit of speculation that the government has borrowed too much and we might not be able to fulfill our debt obligations regarding our bonds. Number three is that the dividend season is over. Once the dividend season is over, that means you're just holding your share purely for capital gain. And in this case, you need to have confidence in the companies and confidence in the operations and confidence that they'll be able to make a profit. And since every aspect of the economy is looking down, remember, we've hit the all-time high of 148.28, exchanging for the shilling to the dollar, which means the currency is weakening, which means the economy is weakening, which means the countries in those economies are not going to do better. And for example, if you look at the biggest share on the Nairobi Stock Exchange, which is Safaricom, it has lost 36% of its value, to now be trading at a low of 14 shillings and 70 cents. So if the largest stock on the stock exchange is doing badly, then probably you have no business holding that stock or being in that country. You'd rather just withdraw your money, which is what has happened. And the Nairobi Stock Exchange is now rated as the worst performing in Africa. Maybe by next year, things will turn up and things will get better. But for now, we are holding tight.
Holding tight. Thank you so much. Always great having your perspective. Wachira Kariuki, Head Training and Research, Windsor Brokers in Kenya. Thank you so much.
Thank you. Most appreciated. Thank you, Ladi. Have a good one.
You too.